Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece is an opinion only. Let's kick off. Okay, all equity markets, European, UK, and US were down yesterday. The US markets started down, continued down throughout the day, fourth day running. Why? No debt ceiling agreement, and the clock is ticking. The Republicans and the Democrats are coming head to head, and the fallout from that is going to be the economy, equity markets, and obviously commodity markets and other markets with it. So Janet Yellen has warned about the 1st of June deadline. There is obviously an air of pressure there. If they don't reach the deadline, then we're going to see further fallout. FOMC minutes of the previous meeting showed confusion as far as the Fed is concerned. There was a unanimous vote to increase interest rates by 25 basis points. However, there was confusion where to go, and the committee is split how to act in the future. There's some members want to raise rates at the next meeting, and most of the members don't because of the impact it's going to have on the economy. So what you've got at the moment is confusion. Where reigns confusion, reigns chaos. There's going to be chaos in markets because they're getting no clear direction. One thing is pretty clear: there will not be an interest rate rise at the next meeting, but they don't cancel further interest rate rises going forward. There are some members of the committee that are hawkish, and the minutes clearly state there's a split in the committee between hawkish members and less hawkish or dovish members that want to lay off as far as interest rate rises. If inflation continues to rise in the States, where core inflation is particularly high, then you're going to have obviously more pressure on the Fed going forward. European markets came off, UK markets came off, even though inflation dropped down from 10.1 to 8.7. Now that's headline inflation, not core inflation. Core inflation is running at the highest in 30 years, and it's core inflation which caused a sell-off in the UK markets. Remember, you can have headline inflation, which can be effectively manipulated by the Bureau of Statistics or the government, but core inflation is far too high. Inflation came down in the UK because of lower energy costs. Energy costs have come off. However, the cost of food inflation is running at 19%, and that shows no signs of abating. And as long as you've got core inflation, which is the fiery furnace of inflation raging, then that's going to concern the Bank of England when it comes to raising rates, and they will raise rates at the next meeting. And the pound is slightly stronger against some currencies, not against the dollar. Against some currencies it did push up. It was moved up slightly against the dollar yesterday, but it looks like rates are going up in the UK again, which will cause more misery for mortgage holders and obviously businessmen, whether you're having a car loan, credit card, commercial loan, overdraft or mortgage as far as the UK is concerned. European markets under pressure, mainly following on from the US concerns. Remember I said to you that DAX was an all-time high looking to sell a few days ago. Well, it's come off significantly, and it looks like it's going to come off some more. Come off means it's going to go down for those listeners who don't understand what the word come off is. It's an expression used in markets, so you can expect the DAX to fall further. Also, look at chip makers and look at Nvidia. Nvidia went up 15%. Went to 50% on the back of its AI GPT chat. Now, the whole AI GPT chat is a bubble. It might be a small bubble at the moment, but it is a bubble, and all bubbles end up popping. And that's what's going to happen. Whether it's going to be 1 month, 2 months, or as one viewer said, 1 year, 2 years, it is going to pop. In my opinion, it's going to pop within 2023. So by the end of 2023, all this AI GPT, which is highly inflated and has pushed stocks up significantly, whether it's Apple, whether it's Meta, whether it's Amazon, Google, and now Nvidia, that is a classic bubble, and probably something to stay clear of. Moving on to cryptos, Bitcoin has floated all the way down to $26,000 a coin. Remember, $25,000 is a big support level. Previously, last year, $25,000 was a upper resistance level, and now that $25,000 has become a support level for Bitcoin. Those of you who are crypto traders, looking at foreign exchange, expect the pound to move up, and dollar yen, expect the yen to sink and the dollar to move up against the yen. You've got the dollar yen is running at 139.5. I expect it to breach the 140 and move on from there. The Japanese equities, Japanese markets are doing very, very well. They've been the highest in many, many years. I can't say exactly, but I think it's about 20 years they've moved on high. But meanwhile, China is lagging global markets, under pressure, fears of recession there, fears of economic downturn, and also they're going to have to put in huge stimulus into the Chinese economy, which they will do in order to boost up. Remember, I have been saying China is a #1 contester for place one against the US. It wants to replace the US as the global economy and replace the dollar with the yuan, and the Chinese are buying huge amounts of gold in order to make the yuan gold backed. So it'll be one of the only major G7 gold-backed currencies in order to replace the dollar. That is the focus. Mark my words, that's what's likely to happen over the next couple of years. And the US has a battle on its hands, considering that Joe Biden is asleep most of the time and is not there. This is Mayor Valensky with Driving Markets. Subscribe, share, comment. You can catch me on Instagram and also on TikTok. Have a good day.